So where do we go from here? What is an ERP? Or, again, this can be this tool and technique can be applied to anybody, but we tend to focus our attention on manufacturers and distributors, and ERP is almost synonymous with them as their largest source and example of enterprise software. So the first thing that we state, and this is a guiding principle with a lot of initiatives, and that is to sit down and really define your goals and objectives. And we're going to walk you through some examples here, but a good way to go about this is, rather than making system improvement the end in and of itself, ask yourself this question: why would you invest in intangible software assets that no one can see? You experience it, but why would you invest in those instead of things like production equipment, warehouse equipment, new dock doors, things like that? That will be a good challenge for you to justify the work that you're going to be embarking on. And here's some things to consider. How or will your customers be served better? What is their experience going to be, and how will it be improved from a quality, a service, an accuracy standpoint, or just a ease of doing business with? How might costs or expenses be reduced? How might you improve your return on assets? Common examples there are, can we deliver the same level of profits and sales with less inventory or with less accounts receivable, whatever that is. But inventory tends to be the biggest one that we see looked at. How will employee productivity be increased? If anybody remembers an old education type person, Eli Goldratt, who wrote The Goal, he often talked about how many savings that we justify investments are a bit of a mirage. But these days, that was back in the 90s, but these days where we're trying to do more with less, employee productivity does tend to improve profitability by allowing you to scale up and handle more volume with the same level of personnel. How might other stakeholders benefit? I've read that you must not just consider your employees, your customers, your owners, but also your suppliers and your community. Are there things that you might bring benefit to that will help others? So here's some goals and objectives that we've pulled out of, for this presentation, pulled out of some of our other client processes. I was mentioning to Molly earlier that I started my career with Westinghouse, and they were big, and it's not unique to Westinghouse, but they were big on using SMART goals: specific, measurable, achievable, I think relevant, and time-based. So we try to use that same mentality. So we had a client say that they want to reduce their RFQ to quote delivery time by 2 days. Very specific. It wasn't, to get it to zero or to get it to next to nothing, but they wanted to shave 2 days off of it. Increase inventory turns by 50%. I think that was one going from 2 to 3 or something like that. So it wasn't wildly out there, or reduce AR days outstanding. Close 95% of customer cases, incidents, complaints, whatever it is, within 24 hours. Realizing that we can't be perfect, but we need to be better than where we are. Enable mobile access without middleware. Little less specific, but certainly in the days of COVID, something that is relatable. Support 25% sales growth without 25% headcount growth. That one tends to ring true, especially with companies that are seeking to grow. This last one was from a company that had grown through acquisition, and through those acquisitions had accumulated a mishmash of different systems that ranged from QuickBooks on the low end to some larger, well-known ERP systems and CRM systems on the other end. So just a consolidation and simplification theme there, and then just gaining better insights into reporting. So again, and if anyone is interested, we can certainly provide you a copy of this slide deck, because these might serve as examples for you as you go forward. So So those are your goals and objectives. And then we want to make sure that we develop an ERP strategy. When we work with small and mid-sized companies, sometimes the term strategy causes eyes to glaze over. And I want to assure you, we're not talking about some big McKinsey study here. It's simply stating, maybe a plan is a better word here, but your ERP software, your business software are strategic assets, and they simply warrant a plan. Just like any other asset, a CNC vertical mill or something like that in your shop. So make sure that your systems align with your business strategy. So think in terms of what is your business strategy? Are you a low cost, low price provider that might be competing on thin margins, but you're making it up on volume, for example? But whatever those business strategies are and how you compete with your customers and who's got the power in the relationship between you and your suppliers or you and your customers, then think about how the ERP system should support how you're competing in the market and determine if it does. And if it's not supportive, if it's for example, if you're in a tough market and need to be a low cost provider, and you've got a system that requires a lot of care and feeding, you might have the wrong system, or you may just want to do what you can to minimize the costs in that area. Things like shutting down customizations or what have you. Then you want to identify the gaps. And we talked about that 2 weeks ago, categorizing them into functional and utilization, which are usually addressable, structural and technological. At best, you've got workarounds. Then we want to determine ways to improve the current system's fit. And again, 2 weeks ago, we talked about more than Band-Aids, but if necessary, customize, enhance it with third-party add-ons, what have you. Always look for those potential obstacles. What might get in the way from a personnel standpoint? What might get in the way from a technological standpoint? But prepare for some sort of objections and obstacles. And then also, before going too far forward, and we'll talk about this in more detail at the end, include your budget. And one of the things that I can express to you with a lot of experience is there are many hard and soft costs. In most instances, when you're undertaking an enterprise software initiative, you'll get a quote from somebody, a third-party provider, the software publisher. But this is one of the few industries where they're going to be working extensively with your people. Unlike, let's say, the landscape industry, where if a landscaper quotes me doing my flower beds, he's not expecting to have me or my wife or my kids help him. In an ERP or any type of business software initiative, your own staff will be working for or at the direction of or directing these contractors, and there are some soft costs there. And then the other thing that we always suggest is that look at what the do nothing, the null case is, and compare that. What if we did nothing? What if we left well enough alone and kicked the can down the road? Sure, it might not be perfect, and some of our employees might not be happy because they have to do double data entry or whatever. But oftentimes, the costs or the benefits of a massive upgrade or a massive improvement might outstrip the value. And so the do nothing case provides that benchmark. So how do you create the business case? Can we enhance growth better with our current systems? Can an improved system enable us to better meet customer demands? Do our current systems cause any sort of risk of customer loss or order loss? And will improvements reduce that risk? Do our employees waste time looking for information? If you're still looking in file cabinets, might be time to look for a new system or upgrading what you've got. Again, productivity. This is a bigger one that we have seen in recent years, and that is, can improved systems help us better understand our costs and margins, where we're making money? There's a speaker that I've gone to see myself named Larry Goddard, he out of here in Cleveland, And you coined a phrase called cost to serve when you're looking at customers. And sometimes those customers who drive up your costs to serve them might be better being abandoned. And maybe you lose, if you can replace that volume, or even if you can't, you might be more profitable overall. So generally speaking, companies at the highest level compete on 2 to 3 or 1 or 2, not all 3 typically, of these competitive factors when it's business strategy. There's the low cost, low price strategy. And if you're competing on price in the market, our suggestion is make sure, it's not a bad thing to be using mature technology that's got a low annual maintenance cost and low service cost, limited customization, and even if it's being operated plain vanilla. That's a very viable strategy. If, on the other hand, you're competing based on the excellence of customer service, responsiveness, speed to market of information and of product, you're going to want to have strong CRM and a lot of customer-facing applications, customer portals, exchange of documents and information electronically. Much different environment than those competing in that more commodity-based. And then if your lead competitive factor is that you're selling differentiated products, you're going to be needing something like strong product lifecycle management, strong engineering change control, and excellence in CPQ, another one of these 3-letter acronyms that stands for configure, price, quote. So this is just kind of the overall strategy and how everyone melds into it, from providing input into that, and then the directives that tend to come down from the top. So other factors to look at, not just your competitive factor, how you compete in the market, but often related to that is your supply chain model. If you're low volume, high mix, making expensive custom equipment type of environment that is often engineered to order or sometimes make to order, that's going to be a much different environment than the ones that are a bit more repetitive, making products to stock and having them shipped within minutes, hours, or days, vis-a-vis a make to order or engineer to order environment that is making products and shipping them in weeks or months. And certainly in a buy for resale distribution environment, you're shipping very quickly. Different systems have different levels of expertise and excellence in these, and it's important to match your system with your chosen supply chain model. Similar to that is the manufacturing mode, continuous flow process. I don't think we had any chemical manufacturers on here. Most of the companies I saw, I would guess, tend to be more in that intermittent batch, work order or job related type of environment from what I saw in the attendance list. But certainly some systems do better in one manufacturing environment or another. Batch process might be someone who's mixing up cosmetics or paints or things like that. Again, related to those competitive factors are, where are you on the technological continuum? We're all seeing right now a move in the market towards cloud computing. A little cautionary note there is, while there are benefits to the end users, the reason that the market is often, or much of the market is moving to cloud computing is because it's better for the publishers. Now, I think they will tell you, and there certainly are benefits accrued to the companies that use that software, but the cloud model is very attractive for companies that go that way. Do you need that? Do you need modern web-based, cloud-based software, or can you be a follower? Can you work with mature technology that's proven, bulletproof, system doesn't go down, but it may not be the prettiest layout of screens or whatnot? Same with fitment. There are plenty of companies whose business is relatively simple and can use off-the-shelf software in a plain vanilla manner, particularly if they find one that fits them well and does well by them. And that is a very viable way to run your business. There are other businesses who this will tend to be more in those that are service excellence differentiating or product differentiating, where they do need some degree of custom software in order to so that their processes provide that differentiation. So no right answer, but it's important for you to figure out where in these continuums you lie. Other factors to consider. Are you today, and should you be, a self-sufficient, self-supporting company where you have the software on premise, you're supporting it yourselves, you have IT people typically internally, or do you want to outsource some or all of that? Is it a headache? Do you see your enterprise software much like a utility? And it's something that you need to have. It's a necessary cost of doing business, much like your electricity or your natural gas. Again, related to where are you in terms of how you compete, some companies like to provide their users with a autonomy to change their own experience, to change screens, to do queries, things like that, versus a standardized, more rigid, repetitive type of environment. And also understand where you are from a decision-making cultural aspect. We have a client right now that internally they joke, we don't need charts and graphs. If we want to know what to do, we go ask Rich. Rich is the owner, and they don't need a lot of analytics-based decision-making. On the other hand, and I can tell by walking into a client, if I see graphs and charts all over, it's going to be more of an analytics-based environment. And then other aspects would be how important is customer and supplier collaboration and interchange intensity. Other factors to consider. Did you buy your software so that everything came from one provider, or do you like a quilt of many colors, in Dolly Parton speak, that is coming from a variety of vendors? Does it matter to you who your software provider is from a brand name perspective, or do you mind working with a mom and pop shop that's a bit of a boutique? We recently worked with a client who opted to switch their ERP vendor primarily because they were planning to sell the company in the next 5 years, and they wanted they thought that the ERP system that they were running would help, would detract from the value of the company, and they wanted to have a well-known brand name, kind of analyst recognized type of company. And that gets into some of these here with whether it's domestic or foreign, or sold directly or through local support. Availability of local resources is important, can be important, not so much in the days of COVID right now, but if your strategy is to outsource much of your work, you can minimize some of the costs by having local resources that can be on site and put boots on the ground quickly. So our suggestion as you embark on this, and this is stage 2, is decide on these strategic factors early. And this doesn't mean that you're in replacement mode, but at least we would recommend a takeaway from today is go back and identify what are those strategic factors and where are you, and see how your current provider or providers align with them. Doesn't mean that it's time to go switch, but it just says that you might have some misalignment. Some misalignment is normal. If it's entirely misaligned, then you might want to rethink things. Again, there's no right or wrong answers, but the quicker doing this at the high level, and this is literally a 1 or a 2-page exercise, provide quicker decisions on things like when the IT guy comes in and says, hey, I'd like to do an upgrade. Well, before we spend the money on an upgrade, are we in the right vendor community here? Because I don't want to throw more good money after bad. And so that's why these guiding principles and strategy will save time in subsequent steps. As they say, do the strategy first and then deal with the tactics later. So this is just a sample from a client that we worked with. We've got their revenue, their manufacturing mode and supply chain mode. They're a cost competitive environment, so IT and ERP must support that. They view themselves as a technology follower, not interested in the latest and greatest. They've got a 1 to 2 person IT staff that which forces some reliance on outside expertise. They do an extensive amount of quoting and estimating, so they wanted to make sure that they can have exchange documents and files electronically. Here were some of their concerns related to their vendor. that they're, given a clean slate. What would they be? What would they prefer? As much as possible from a kind of a one-stop shop. And our comments to them, let's see how your vendor stacks up with these things before you proceed on a big upgrade or something like that. So again, that was a very short strategy document, but it's a worthwhile thing to revisit every couple of years just to make sure there's alignment with your business and the software that's kind of the lifeblood of the company. So tools and techniques to get there. Now, once you've decided that you're aligned, you've got the right vendor, you're not in a need to replace what you've got, but you might want to consider an upgrade or some enhancements. How do we go about that? One of the things that we suggest as part of an ongoing and a good business practice regardless is having a good supply of process maps. Certainly, one of the ways to do this, it's a classic tool for identifying waste and opportunities for improvement. If you go back to 2 weeks ago's webinar, we also talked about as employees leave, you lose tribal knowledge, and making sure that your processes are mapped will help in the prevention of loss of that knowledge and also help with the onboarding of new employees or, beyond just new employees, new companies or new facilities as you do an acquisition, for example. So these are the general processes that a manufacturing company might want to consider mapping, map the as-is state, and then use the as-is state to identify opportunities for improvement. And this is just a generic example I pulled off the web, but these are some examples that we've pulled together from some of our clients over the years. This was a client's service, return, repair, and then return to customer cycle. And if anyone's familiar with what some call a swim lane diagram, you see that the different departments, or in some cases, one-person departments that are involved in all of that. And this involves the ERP system, but it's certainly not limited to it. It includes all of the tasks that someone might do outside of a system. This is one from a company's return goods process. And this was a somewhat higher level, because I see that we have some embedded processes using this symbol, which is a process within a process. And this is a formula package change process from a company that we worked with that makes pet food. And going through a packaging change for them was an extraordinary event because it had to be approved by Walmart and other retailers. Wasn't just something they could do willy-nilly. And then this was a single-threaded process for a client's invoicing process. This is one person documenting all of the steps that person who does their invoicing traverses through in order to get the invoices from between shipment and out the door, or electronically or physically via mail to their customers. And as you can see, it's astonishing and quite a learning experience, an eye-opener to see that there is that many steps involved in getting invoices out and to your customers. So process mapping, we think, is something that companies should do on an ongoing basis as just a good business practice. Departmental managers or the lead in a department of one should be something they should be able to do. And again, the ABC analysis applies here. Pick the 20% of the processes that are 80% of the complexity and the value, at least for starters. Once you've got a good handle on your processes and how they work, one of my colleagues says that there's make sure that you define what is, not what ought to be, meaning really walk the process. Once you've done that, make sure then you can define your detailed requirements profile. And this is something that you want to do at any time prior to an upgrade or a major extension of your systems to other plants or related companies. And by upgrade, I'm talking about not just an upgrade of a version, but any sort of major customization or modification, or if you're simply looking to re-implement or implement new modules that you hadn't been using. Certainly, and of course, if you're replacing a system, you want to have a requirements profile, or more, and also at the end of a process, if you go through an implementation or an upgrade and you want to do a utilization or a fit assessment, like we discussed 2 weeks ago. So these are the topics that we find most manufacturing companies, and we tend to see distribution as being a subset of these. These are topics that we would suggest you examine. Now, maybe someone would get crossed off once it's described or once it's detailed description is conveyed. But these are the processes and the topics that we would suggest companies go through when defining their detailed requirements. The ones in red are there specifically because, or we put in red specifically because we often see them coming from separate systems. Marketing and Salesforce automation often is used in a separate CRM system, similar to post-sale service. Production scheduling is often a separate tool from the ERP system. Asset management and maintenance and even fixed asset accounting is often a standalone product. So how do we go about this? We suggest identifying somewhere between 50 and 150 requirements per topic. You can look at things like master file settings, like when I set up an item, I need these fields or these elements. When I traverse through transactions, I need to, at the sales order level or the purchase order level, I need to be able to handle these types of transactions. Much of this can be distilled from your future state process maps, or as is if you're not looking to change your processes. But walk through each step of your process map and say, does this impact my ERP system? And what are the data elements that we have there? Where possible, relate to those goals and objectives that we set in step one. And then for any requirement, put a relative weight on it. High, medium, low, 1, 2, 3. We use strategic, required, and nice to have, whatever makes sense. And then, but for those that are very highly weighted, provide reasons or examples, provide that justification. This is a really important requirement. We need to be doing this in our system. You ought to be answering, someone ought to answer why. And get a variety of input. Get from visionary employees and change agents. They're often the ones who maybe are new or have come from other environments, but make sure that they're governed by or countered by those who prefer the status quo. Change agents can sometimes lead you over a cliff, and these folks might not let you move at all. And a blend is we find the best avenue. And always be sure to get executive level involvement and oversight to make sure that the prioritization is done appropriately. So here's a set of examples, again, of real world client requirements coming from their software. Again, these can be used when shopping for new software or to define what we should be doing with our existing system and then benchmarking ourselves, are we actually using that? Things like the scheduling logic should group like work together. We had one client that wanted to sequence the paint line by color, and we had another client that said they want to sequence their presses by raw material type. Multiple costing methods within a plant. Found one company, and I obviously hid some of the details here, but one product line was costed, it's using standard costs with variances. Another one was a bit more actual costing oriented because it was a bit of a job shop product line. Make sure that you identify those. This one here with multiple costing methods within a plant, that was an ideal setting for this particular client. Unfortunately, their current system didn't support this and they had to pick. But at least, going in, that was a miss from the software's perspective. Accumulation of those tell you it's a bad fit and not a good supporting system. One or two of these, might be tolerable. And I certainly would not recommend changing the system's costing methods, as that has tentacles into many, many things. These tend not to be, while they involve technology, these are more business projects than they are technology projects, but we don't want to leave out the technological aspects. So these tend to be features, not processes. So this really lends itself to a bit of a checklist approach. And there are very many templates out there that give you checklists of what you might expect or ask for from a business system, from a user interface standpoint, from a document management standpoint, from training aids and help standpoint, databases. There's not a lot you can do with some of these. If you buy, for example, the IQMS ERP system, your option is to use the Oracle database. You don't get a lot of choices there. So most often our clients who are not really anxious to switch systems will put fairly low weights on this, knowing it's going to be very hard to change. But things like security, are we using our security aspects right? Or query tools and analytical tools or customization tools, workflow management tools. These are all things that are worth looking at from a checklist standpoint, saying, could we be using these types of tools to enhance our experience? And then does our vendor offer them? And the reason I say that is even if your vendor doesn't offer them, these are things that you can often buy from independent software vendors that can be bolted on or linked on to an existing ERP system to improve your experience. So how do you build this? Do-it-yourself approach is more than adequate. A blank sheet of paper is a way to go about it, as long as you get people who are fairly creative. We have found that you can go to the online world and find checklists and templates to walk through to get you a starter. Think of those as a bit of a checklist that says, these are things that are commonly found. Ask yourself, do you need these things or not? Does your system need to provide them? And would they improve your experience with your existing system or systems? A consultant facilitated approach will bring experience, typically some tool or template, and more often than not will help expose you to new or others' ideas. And in fact, if a consultant comes in and you feel you're not getting exposure to new ideas, to others' ideas, to thinking outside the box or coloring outside the lines, you probably don't have much of a consultant, you have more of a mechanic. They should be bringing their own knowledge base or tools with them. The other thing that you then want to do is review your business processes and how they're supported by your current package, custom software, reports. Look at all of the things that are done outside the system, Excel spreadsheets and Access databases. One of my best sources when I help a company is I'll look for manual logbooks at the receiving dock, at the shipping dock, in customer service, in the inside sales department. There are always logbooks that you find or lists that people are keeping that really are really a waste of time and create a lot of duplicate data entry. While the checklist approach is right, they might not expose you to or cover what's unique about your business. And so don't worry about coloring outside the lines or identifying some requirements that you have already thought of and maybe had developed, or that you've been wanting to do but haven't pulled the trigger on, especially those things that are unique and help you compete with your customers or with your competitors. Step 5 is to look at your current system's capabilities to support and your level of utilization. We touched on this a little bit. This is really our approach that is driven by the Harrington model. And that is, for every one of those requirements that you identified, determine if and how your current system, and by current system or systems, I mean the versions that you own and are on, do they support that out of the box fully? Is there some amount of tailoring, or was there some amount of tailoring, customization, or modification required to get there? The reason I say that is I met with a company yesterday. They've been on a system since 1999. They bought it in advance of the Y2K problem. They have, according to them, and it's early in our discovery, heavily customized it. And their question is, would they have to redo those customizations if they switched and bought a new, more modern system? And I said to them, we're going to have to go through your requirements, and some of those requirements are those things you developed custom, and then we'll be able to tell you whether you whether those things would have to be redone because you designed a car that flies, and cars that fly aren't yet available on the market, or, as I suspect but don't yet know, they develop things that are now commercially and readily available on the market. So we will see, but that's why knowing what requirements you had and that you fulfilled them through some degree of customization is very important. Or if you bought a bolt-on product or an embedded partner product, an add-on module. And so then if it's supported, then it's important to know, are we using it? And there's no right way or wrong way to do that. Yes or no is pretty plain and matter of fact. Maybe you've got some issues with it. You give yourself a B letter grade and we'd like it to be an A. That might be a little bit of over analysis, but either way, how well and if it's being utilized. And then from there, you can calculate the software's fit and utilization. And it's simple mathematical exercise. You assign numeric weights to high, medium, low, 10, 5, 1, 100, 1.1, whatever makes sense to you. Then you sum up the weights of all of your requirements, and that's your denominator. And we suggest having it in total and then by topic, so that elements of manufacturing are separated from elements of sale, are separated from elements of purchasing, separated from elements of maintenance and quality, et cetera. And then the vendor's software or softwares get full credit for the weight if they support it fully and out of the box. They get partial credit if some sort of customization was required, or they get no credit if the answer was no, they don't support this. We'd really like it. We can't do that today. And the sum of the vendor's points, again, by module or topic or however you break it out, is the numerator. And that gives you your percentage, is the numerator over the denominator. We use something like this where, we simply just give full credit or yes, no, but, maybe you give 95% credit if their level of use is an A and 85 if a B. But, our view of that is you can make this too mathematical and get lost in the forest. And this, while it might be a little hard to see, this is an active client's scorecard. And they asked us to assess whether they should upgrade or replace or keep what they've got and just make better use of it under the theory that maybe they weren't a particularly good user of their existing system. And it happens to be a system I mentioned earlier, IQMS. They are on version 14. And we surveyed these areas. We sat down with them. We monitored and watched their processes. We developed a requirements profile with them. And just picking one row like purchasing here, we put a 10% weight on it, meaning 10% of the benefits and gains from this re-implementation would come from the purchasing area. We found that the version 14 was a 92.9% fit. They get no benefit from upgrading to version 16. It's just a 92.9% fit. So from those two versions, we're showing them that maybe there were some changes in the software, but none of those changes apply to them in the area of purchasing. However, they're only using 57.7% of those 92.9%. In the case of MRP, 98.6% fit, a slight 99% fit, slight increase if they go to a new version, they're using none of it. In quality was actually an area where they're doing pretty well. It's a 95.8% fit. They're using 83.3% of it. The quality manager got a couple of pats on the back and was able to leave the room without getting scathed. But you can see these areas in red and yellow were not particularly well scored. And these are on the improvement list for going forward, because in total, the software they've got is a quite excellent fit of 92%. An upgrade gets them a modest 1.6% theoretical capability improvement, but the real benefit will come from implementing those features that are sitting idle and not being used. And in their particular case, well, the line usually gets a lot of jokes, is ERP will be an Excel replacement program. In most of these areas, we saw that they're doing a lot more in Excel than they are in doing IQMS. So our thoughts and guidelines are, if the software's fit is less than 80%, then do an upgrade if the upgrade will deliver more than 80%. If the upgrade won't, then consider a replacement. If the level of utilization is less than 70%, like we just showed you, then a true re-engineering approach is going to be required, and outside assistance from the vendor or an independent like us or a combination thereof is warranted. It's less than 70% is not doing well with the system, and there are most likely, in our experience, lots of opportunities for improvement that will deliver business benefit. If the utilization is between 70 and 90, then just simply monitoring and taking a continuous improvement process typically, can be done without outside assistance. You've gotten to the 75% utilization. If you've gotten there without a lot of outside assistance, we think just using a framework and exposing it and monitoring it and having a regular audit will, just the mere fact of paying attention to it, you'll drive up the level of utilization. That 70 to 90 is doing quite well. If you're above 90% utilization, then we would suggest you're doing really well and go out and become a high-priced consulting firm. So how do you learn what the software's capabilities are? There's a couple of approaches here. One, especially if you feel that you're not utilizing the system fully, you can develop your requirements list and send it to the software providers. This is a low cost. You don't have to pay for them, especially when they realize they might be able to sell you new modules or licenses. The big question there is, will the vendor understand what you mean, what your requirements are, and will the descriptions be understandable? And will they respond accurately? If you're an existing customer and you send it to your current vendor, I think they will have some incentive because they will want to keep you. So our suggestion there is, this is a pretty easy way to get it. Define those requirements, contact your vendor, and start with the most critical deal breaker requirements, especially those that are high degree of difficulty. Those that you weighted low are nice to have. That's the fruit that's way up high on the tree, might be hard to get at. You can leave that aside. That's not going to be the driver for a huge amount of improvement. There are online databases, we've shown you ours, that can help you provide with some of those answers. It can be a little bit more expensive, and so you really have to determine whether the time savings and quality are worth it. In essence, back to that, do you want to outsource some of this intel and research to someone who may already have it? You'd certainly want to understand the consulting firm's research process. How do they know what Global Shop can do, or NetSuite can do, or Microsoft can do? Make sure that they're giving you accurate answers, and examine samples from their prior engagements. So with that kind of plan being developed, now the question is, how do we make this happen? And we get to step 6 of number 7. One of the first things you do before you actually launch, now we've got a plan, we've got an ideal state of what we'd like, we've framed kind of the design, and really steps 1 and 5 are really about the design. And that just comes from my view of measure twice and cut once. Finishing that off is, what's this going to cost us? And, if you're in a traditional, what we've known for many years, the on-premise or even a hosted model, you might have infrastructure where a vendor is hosting that application for you. You still might have infrastructure costs. You're going to have user device costs. We frequently run into companies who say, we know our current system is fine, but we want to embark on devoting more to it or getting more out of it. And we want to use handhelds and barcoding and shop floor execution and devices on the shop floor. One of my favorite clients bought a bunch of Sears roller carts so that they move them around to their mold presses. Really novel. But they invested quite a bit of money in not just the devices, but even those roller carts from the red carts that you see for Sears for tool holders. Any sort of specialty like zebra printers for barcodes. You might have software license costs. one of our clients went about a major increase in improvement and ended up having to buy more licenses because they were introducing the system to more people, which was better than replacing it, but they did have to invest quite a bit of money in new software licenses. This traditional model will tend to offer you lower annual support costs than, say, a subscription model with your software vendor, but it will bring some hidden costs like your internal staff. When you're on premise, you tend to either have a person that's a W-2 employee, or maybe you have an outsourced technologist who's going to be doing that work, but I still consider them to be internal people who are maintaining your servers and patches and all of those kind of things. If you switch, or if you're already there, you know that a software as a service model is much more like our cable company or our electrical or natural gas providers, and that is, it's a service and it's a utility. So there's negligible infrastructure costs, but we still do have to provide things like printers and handhelds and devices at the shop floor stations. There's no software license costs, which is in the favor of a subscription model. You don't have to buy the software, you're renting it, but you do have a higher annual cost vis-a-vis here from being the subscription tends to be 2 to 3 times that annual support cost from a vendor who sells licenses that you own perpetually. Implementation costs from a professional services standpoint, from a functionality standpoint, tend to be the same depending on which model you have. A big thing to look at and to consider if you're contemplating software as a service is, are my upgrades included? Some that have gone to the software as a service model include upgrades, and it's literally like your phone where it shows up the next day and you got an upgrade. Others, it's a cost that you don't incur or that you pay for separately. So you definitely want to look at that. Big thing here, these are pretty self-explanatory, and if we send you a copy, you'll see these. But oftentimes the internal resource time and effort and cost, therefore, will be 5 to 10 times that of your external consulting costs. Just by getting people to adopt and utilize the system and involving them, it can be an expensive venture. So if you've got other improvement exercises going on, or other things like ISO registration or AS registration, you're consolidating plants, you're buying a new plant, whatever it is, this has to be at that level of a project, because otherwise you may take on too much. And look at what other capital projects is this going to be competing with, and be sure that those internal resources aren't deployed on other projects and that you don't tax them. So I'm going to skip this slide because this has more to do with buying new systems, and we're really not there. But as you implement and roll out, whether it's a new system or new features of your current system, there's often a conflict between time to benefit and the time required. Some companies will implement what was purchased and go all in. The less disruptive approach, which again, if you're a low cost, low provider, you want to minimally disrupt your business, would be by module or feature, by location or department, but more of a phased approach. Start with a pilot project and then extend it to other areas or other products or other business units. Talk with your software vendor though, because you're ultimately going to have some professional services involved. They may have preferred approaches and may be able to guide you there. They should be able to guide you there, and make sure that you confirm some of their successes with references. Don't just get an opinion, but make sure that you get some thoughts there. And again, more often than not, we see our clients using a combo approach, internal people as well as consultants. This is pretty rare, especially in the small and mid-market where they bring in a bunch of suits, but the do-it-yourself approach can often lead to distractions and long time to benefit. So a blend is generally a good happy medium, the porridge that's just right. With your software provider and your internal people, you want to make sure that you develop a budgeted timeline, or a budget and a timeline, and flow out the cash flow as well as when it's going to be implemented. Our recommended approach is to walk through whether you're adopting new features, changing how you're using the system, educate the team first after you've developed your plan and budget, educate them how the software works. It's very basic. It's boring to some people because they feel like they're going through Algebra 1. But before you can go in and simulate in a laboratory setting how we're going to use it in our business, you want to know how it works in theory. Out of that laboratory work where you define the process and simulate it, you can start developing your procedures, how people will actually utilize it for training, and any sort of special changes that you need to make it work in your environment. Then you go through a dress rehearsal or a conference room pilot. Then and only then do you go out and change the end user, train the end users. Notice here, this is education for our team. How does it work? This is training. What budget, what buttons do I push? Once everyone has been trained, then you can start cutting over, loading the files, changing over, doing the upgrade of the system, what have you, and go live. But this is an effective change management process when rolling out new features that people have been asking for. And this is the one slide that I mentioned about technology paradox. If you look at these two pictures, you ask yourself who's working harder and then who gets paid more. And the answer is the guy on the left is probably working harder, but the person on the right is probably getting paid more. So as you roll out features and functions and technology, you want to make sure that you're getting productivity, but you also want to make sure that you share some of those gains with the folks who are operating it. So summary and conclusion, and I think we're getting close to the end of time. Just some recommended takeaways. We are big fans of measuring your system's fit and utilization, and we recommend updating those and looking at it annually. No different than a financial audit that companies go through, and no different than monitoring the utilization and OEE or whatever it is that you call it of your important production equipment. Develop those work procedures and process maps to institutionalize the use of your ERP and CRM systems. Users should be able to write a narrative in a work procedure format and develop process maps of how the system is used so that if they leave your company, they're not walking out with all of that knowledge, leaving you without the transferability of that knowledge. Recognize that internal and external changes are going to create changes to processes and then therefore the requirements of supporting software. Business level changes, new facilities, new product lines, new agreements with customers to stock product so that you can ship it quicker than the prior make to order model, all have impacts on how you use your enterprise software systems. And a good rule of thumb is any software initiative that you undertake should cost you as much in education and training as it does in the software and hardware. And again, costs include some internal costs, if you put value on your people's time. The technology is neat, but the people who aren't educated and trained on it won't use it, and they won't use it effectively, and it will end up as waste. So that, last commercial message about Meaden and Moore. We're headquartered in Cleveland, have been here since 1919. We have offices in Meadville and Pittsburgh. So that's hence the connection to Western PA. We have 250 total professionals, about 12 in my group that helps manufacturers and distributors and industrial service providers. And we come at this with an independent standpoint. So we're not going to try and sell you any software. And that is all I had. So I thank you for hanging on and listening, and would be more than happy to spend some time answering questions.
Great. Thank you, Scott. A lot of great information, very helpful, I think, to the manufacturers that have joined us today. I don't see any questions, so I'll give everyone a minute to go ahead and put any questions in there that they might have. I'm going to go ahead and launch the poll that I mentioned at the beginning. It's just 3 questions. Again, let's us know how we did today and how we might be able to help you in the future. So your information is greatly appreciated on that, and it is anonymous. And we'll just hang out for another minute just to see if anyone has any questions. Scott, any final thoughts or comments you'd like to make to wrap it up?
No, thanks. I think that I talked a lot, and I think that you know, that I really do appreciate everyone staying. But anything I had to say, I've already said.
Great, thank you.
Yep.
Great. I still don't see any questions. Like
Okay.
I said, we'll just stay on for about another minute
Yeah.
to make sure that we don't have anybody typing anything. Thank you to those that have already done the poll. Appreciate that. And we'll just hang out for another minute. As Scott said, if you have any questions after, feel free to reach out to me and I can put you in touch with Scott. And a reminder, we will send out an email with a link for the recording of today's session as well. So there's questions that come up if you rewatch it, feel free to reach out at any time.
Yeah. And Molly, if it's okay with you, I'm happy to provide a copy of the presentation to anybody who'd like it. So if, I don't know how you, if they want to ask you or contact me, but I'd be happy to. There's some slides in there that I think might have some good tidbits or takeaways if they want to go embark on something, and I'm happy to provide that.
Great, thank you. So yeah, if you already know you want the slides, go ahead and put it in the chat box now and I'll email that out to you, or just contact me directly and I can get that to you. So thank you, Scott.
Yep.
Okay. Well, do you see that we're right at noon? So in respect to everyone's time, we're going to go ahead and jump off. It was great, kind of being on here with everyone, and I hope everyone has a great day.
Great. Thank you.
Thank you.